Hello, ladies and gentlemen. This is Greg Michalowski, and this is a Forex commentary for FXStreet for Monday, July 19th, 2010. What I want to look at is the sterling versus U.S. dollar here today for my analysis, and taking a look at this currency pair. It does seem like it's getting a little bit tired here, but we do have some clues that we'll be looking at here this evening in this evening's or the new day's trading in the Forex session to see if we get that follow through selling that we've seen over the last couple days. With looking at the technicals here, on the first starting off with the daily chart here, what we note here, what I notice here off of this chart is the high to low trading range here at a 38.2% retracement and around the 152.40 level. You can see here the market that moved up pretty steadily to the top side here, breaking through trend line support, breaking through the 100 bar moving average. Had a little trouble here, but was able to push higher here above this 152.40 level here. Although the market had some problems here at this point right here, we were able to push through last week and reach a high level that went all the way up to 154.70. Additional resistance on the top side comes in at the 50% retracement of that same move to the downside at 155.53. Also at that level or near that level is a 200-day moving average that's represented by this green line here at 155.78. So from a longer-term perspective, we are we were positive because we moved above the 100-day moving average last week. We did fall short of the 50%, fall short of the 200-day, and now today is a key level, key day because we moved back below that 152.40 level, which was that retracement level, and also a ceiling here for the trading that has occurred over the last couple weeks. You can see that more closely in this hourly chart here, where the highs came up toward that 152.40 level, backed off, came up to the 152 toward the 150.40 level, backed off, moved up right up to that 152.40 level and backed off again. These highs were 27, by the way, and that's exactly where the market is, right near where the market is currently trading right at the moment. When we moved forward to last week's trading, we came up to the 40 level and backed off and broke through, and then kind of went back and forth here, and then used this level as a springboard to the upside. So you can see the importance of the level just from what I call a remembered price, a price that the market really focuses on, and it becomes a level of reflection or deflection every time the market came to it, moved away, moved away, moved away, and moved away to the downside here today. But today, what we did run into was a 200-hour moving average. That 200 moving average came in at 151.97. The low came in at 152.01. So right now we are in between really a key or support and resistance against these two levels. We have 152.40 on the top side with a 200-hour moving on average on the downside. In addition, we have the 50% retracement, which is getting closer to the 200-hour moving average, moving closer and closer to that level as well. So what does this mean? This means that the market's going to have a decision to make here, probably in this evening's trading session. Do we want to go higher, or do we want to go lower? And what happens if we break to the top side? Where would we go? Well, I would look toward this 100-hour moving average. This 100-hour moving average currently comes in 152.95, and that would be my first target to the upside for the sterling versus US dollar. We may pause at the 152.70 level, which is the 38.2% retracement of this move to the upside, or we can put a Fibonacci on this from the high to the low as well, and probably get a level around this area as well, where the market might find some pause. But basically, I would be looking for that a test of the 100-hour moving average. That's where the market tends to go, especially off of a market inability to break through the 200-hour moving average, a green line on the bottom side. Market tends to move back and forth in between those two ranges. So that's where I would look for the market to go, and then we would look for a further break to the upside from that level. If the market is able to break that level, then look for a move toward 153.47, and then possibly even back up to the highs. It could even go all the way up and start to look toward this 50% retracement toward the 200-day moving average. But first things first, got to get through the 40 level, get through this 100-hour moving average, and that leads the way to the top side. Now, right now, the market, however, is staying below the 40 level, and like I said, trading at that 27 level, that level which was these highs going back to a few weeks ago in their trading. So if we find that if we find the sellers against the 40 level, obviously the next level that the market's going to have to get through is this 200-hour moving average. Market gets through the 200-hour moving average. We start to head down toward lower levels here, 61.8% retracement of this move to the upside, and that level comes in at 151.47. That would be the next target level on the downside for that currency pair. And then we start to look for other support levels where the market might target, including probably this low right here, which we had a low right here, and then we started to use it as a high. Another one of those remember prices, those prices where the market reflects or deflects off these levels. And you can see that level as well. Break through this level, bounce off of it, 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 break through it, use it as resistance. Those are, again, what I call remembered prices, and that's going to be a key level on the downside. So that's how I see the sterling versus U.S. dollar. We are at key level here. The market, I think, is going to make up its mind what it wants to do over the next, maybe 5, 6, 7, 12 hours of trading. I think by this time tomorrow, or by tomorrow, New York morning time, we're going to have a clear directional bias of where the sterling might be going next. And so look for those opportunities here tonight to trade these levels. And if you do, your risk is probably going to be limited on the deal. Use the entry levels or the breakout levels a little bit as your stop loss, give or take a few little pips. That is, a market breaks above 152.40. Put your stop at 30 and see what happens if the market breaks the 200 bar moving average. Put your stop at 10 or 15 or 20 or so in the sterling versus U.S. dollar, and expect the momentum on the breaks to take the market to the next target levels. This is Greg Michalowski with a Forex commentary for FX Street, brought to you by FXDD. Thanks a lot. Talk to you later. Have a great night. Bye-bye.